What's up YouTube? Welcome back to another video, and today we will be going over Uber's Q1 2025 earnings report as well as some statements from their CEO. I've been really looking forward to this during earnings season as they are one of my top individual holdings in my TFSA. Over the last week, they are pretty much flat. They did drop after the earnings report on Wednesday. We will be going over why in this video. So starting off with their earnings report, they posted a very great quarter for Q1, beating all estimates except revenue, which was short of around 90 million, causing the stock price to kind of plummet a little bit on Wednesday pre-market and intraday trading hours. I really don't think this was warranted at all, because 90 million out of 11.5 billion they earned is kind of a sliver of a miss. So although they slightly missed, they still did post 14% year-over-year change in revenue growth. So I do definitely like to see that it's in the mid-teens for growth. Their monthly active users grew by 21 million, which was 14% as well year-over-year, with their gross bookings also growing 14%, and adjusted EBITDA up 35%, free cash flow up 66% year-over-year, which is very substantial growth for this company. Like each quarter they're becoming more and more profitable, which I really love to see. Now for their results by segment, they had 13% increase in mobility and 15% year-over-year growth in their delivery segment, with their freight segment still remaining very small compared to their overall business. They actually did have a 2% decline in revenue, or in gross bookings, sorry. So their freight is definitely starting to decline, obviously, but compared to like the overall thesis for my Uber investment, I really don't see freight as a major factor. I kind of just see it as a little added bonus, so I'm not really too worried about their freight revenue and bookings. So then we go to revenue. Mobility, 15% year-over-year change. Delivery, 18% year-over-year change. And then again, 2% decline on freight. Now for their guidance, we'll actually go back up to the top here. Outlook for Q2 2025, they say they anticipate gross bookings of 45.75 billion to 47.25 billion, which would represent 16 to 20% year-over-year growth on a constant currency basis. Their outlook assumes a roughly 1.5% point currency headwind to total reported year-over-year growth, including a roughly 3% point currency headwind to mobility, as well as adjusted EBITDA of 2.02 billion to 2.12 billion, which would represent 29 to 35% year-over-year growth. Along with their earnings, I want to go over their prepared remarks that they released, specifically what Dara Khosrowshahi says in this opening statement. So it says Uber delivered a strong start to the year against a dizzying backdrop of headlines on trade and economic policy. Our consumer base grew 14% year-over-year to 170 million monthly active users, and engagement on our platform was healthier than ever, with trip growth coming in once again at 18% year-over-year. Gross bookings grew in line with trips, fueled by strength in both mobility and delivery, generating record adjusted EBITDA of 1.9 billion, up 35% year-over-year, converting to free cash flow of 2.3 billion. Coming into this earnings season, tariffs have loomed on many companies and many investors, retail and institutional. Everybody was pretty much worried about this earnings season, just with how these policies have kind of affected the economy. Despite this, Uber posted a very strong start to the year and positive outlook for next quarter. Another quote in this release that I kind of stood out to me was this portion here. It says, in addition to our efforts in the suburbs, we are focused on growing our product portfolio beyond UberX. Consistent with our goal of getting every taxi on Uber, we launched taxis in more than 40 cities across the US, Turkey, Brazil, Italy, Japan, and Poland, with landmark launches in Rio de Janeiro, Florence, and Nagoya. Taxis on Uber are now in 38 countries and over 500 cities, generating over 3.5 billion in annualized gross bookings in Q1, up over 60% year over year. In fact, taxis now represent more than 10% of our mobility trips in EMEA. On the low cost front, we expanded Uber Shuttle to more airports in the US, adding routes to and from some of the busiest airports in the world like JFK, Newark, and Atlanta. So this stood out for me because I really do like how Uber is expanding their market share in many different companies by getting more and more taxi companies onto the Uber platform so that they can keep producing very strong growth for their mobility segment. So lastly, from the prepared remarks document, I have to discuss the autonomous vehicle statement, as a lot of people's bear thesis on Uber, I think, is very dramatically overdone, with the idea that AV is going to destroy Uber's moat. So first he says, we are confident that AV technology is the single greatest opportunity ahead for Uber, and we are laser focused on bringing more partners and more AVs in more places onto the Uber platform. We have been busy bringing several of our AV partnerships to life, and we have quickly grown to an annual run rate of 1.5 million mobility and delivery AV trips on Uber's network. In March, we launched Waymo exclusively on Uber in Austin. So far, this launch has exceeded our expectations. Waymo's safety record and rider experience, coupled with Uber's scale and reliability in the market, have ensured that these vehicles are extremely busy. In fact, these approximately 100 vehicles are now busier than over 99% of all drivers in Austin in terms of completed trips per day. We plan to scale hundreds of vehicles in Austin over the coming months while also gearing up for the launch in Atlanta in early summer. Riders in Atlanta can join our interest list in their Uber app to get updates on our plans. And he says, we also executed 5 new or expanded mobility AV partnerships within just the last week, bringing our total to 18 AV partners globally. In the US, we're planning on partnering with Volkswagen to deploy their fully autonomous vehicles on Uber, with testing set to begin in Los Angeles later this year. We expect a similar timeline for deployments with AV Ride in Dallas, as well as our new partner, May Mobility in Arlington, Texas. Outside of the US, we expanded our existing partnerships with WeRide to 15 additional cities over the next 5 years. And we welcome new partners, Momenta, deploying in Europe early next year, and Pony.ai, deploying in the Middle East this year. Outside of mobility, we also continue to expand autonomous deliveries to more US cities with our partners Coco in Chicago and Miami, Serve in Miami and Dallas, and AV Ride in Jersey City. While still early, sidewalk robots are already creating savings for consumers while delighting passerby. Finally, Uber Freight marked a major milestone this week, partnering with Aurora to deploy a fully autonomous freight trip on public roads with no safety driver. Personally, this just shows that Dara and the management team are very confident in AV technology to bring future growth and revenue to the platform, with 18 AV companies so far, with I would expect more partnerships in the future. Seeing the management team not fear AV and actually embrace this opportunity makes me feel very confident and not scared at all about how this will affect Uber. I really, really do like that they are jumping onto the AV hype, I guess is the best word, and trying to capitalize very early on this opportunity by bringing many partnerships to their platform. And specifically the part where he says approximately 100 vehicles are now busier than 99% of all drivers in Austin in terms of completed trips per day. So these autonomous vehicles, they can go 24/7. Like they don't need to stop, get food. They can just go to the next trip. The only time these vehicles have to stop is to go and charge. So 99% of all drivers in Austin, or busier than 99% of all drivers, is insane. And I think this will absolutely help Uber's moat rather than destroy it in terms of their revenue growth, their daily trips, their mobility usage, everything. So now if we go over to Qualtrim and go to the DCF calculator, If we assume they have a 20% earnings per share growth rate, which is very modest considering they have a 381% growth rate at the moment, and a multiple of 18, we can see that by 2030 they'd have approximately $205 share price with a 19% CAGR over the next 5 years. If we decided to go a little bit more conservative and say 10% growth rates with a PE ratio of 23, which is their approximate 2026 ratio, we can still see that by 2030 they'd have approximately $169 share price, which would be 15% CAGR over the next 5 years. So although these are very speculative and not indicative of what the future will actually hold, I do think that Uber has a long runway for growth, and I'm very optimistic about their future. Overall, I think there's a lot of things to be happy about this quarter. I'm really glad I bought into Uber at the January lows there, and it's been a great, strong performer since adding it. I'm currently up 20% all time in it so far since that time. I have slightly averaged up since then. My average price originally was around 64-ish. So I averaged up a little bit, but it's totally fine. I won't currently be buying more at this moment. I do like my allocation that I have so far. It's around 8% of my TFSA. If I felt like I was a little bit underweighted, I would have definitely bought the little dip it had there after earnings, but I do like the position I have in it right now, so I'm not currently going to be adding more. But over the past 3 months, we can see they're starting to recover after that kind of market crash there. So up 5% in the last 3 months, 14% in the past month, and then flat on the week. But yeah, thank you everybody for watching. I know this is kind of late to the game. They did post on Wednesday, but I was just so busy with work. So thank you for watching. I hope you were able to get something out of it. Feel free to like and subscribe if you so please, and I'll see you in the next one.